So as we're the last thing between you and that promised glass of wine or beer, we're definitely not going to run over time. And maybe we do a very quick 30-second introduction of each of you. And also the topic of the panel is how to scale up startups, or how to go from a startup to a scale up. So as you introduce, maybe a sentence or two on that topic as well.
So my name is Pieter-Jan, PJ, to differentiate versus Jan. So I'm a managing partner at Junction Growth Investors. We invest energy transition only, enabling technology, late stage VC and small buyouts. And before launching Junction 2 years ago, I was an entrepreneur, so I sat at the other side of the table. I was a co-founder at Restore, a company we started in 2010, built it out with 12 million euros of venture capital, sold it to Centrica in 2017. And apparently in 2022, it was labeled by Navigant Guidehouse as the global leader in demand-side management.
Janice.
Excellent. Yeah, so I'm Janice Goodenough. I'm the CEO of Hydrogrid. We offer a digitalization solution for hydropower. We now supply clients in 13 countries, so some experience with geographic scaling there. My background is in applied mathematics, and I've spent my entire career in energy industry. And
do you want to say roughly revenue level that you guys are at? Are you scale up already, or?
I would classify us as a scale up.
So
yes.
Double digit, or?
No exact numbers. I think this is going online. So excellent. You ask me later.
Carsten?
Yeah, I'm Carsten Brinkschulte, co-founder and CEO of Dryad Networks. We create technology to prevent wildfires with ultra-early detection. It's basically building the Internet of Trees and then sensors to detect fires very early on. We've been doing this for 5 years, since 2020 founded. This is my fourth startup. I've done 3 startups, exited them, 1 to BlackBerry and 1 to Twilio. This is the first impact for profit, the first proper company that I'm doing. And it actually does something useful, I think. And why I'm on this panel is that we've reached, I guess, something that you would call a scale up. We're at the edge of it, I would say. We're above 1 million revenue. We're targeting about 5 million this year. And that is a critical moment in time in the company, very difficult. And I hope I can share some of the experiences while doing that.
And some of the prior companies you did scale definitely beyond that point, in a big way.
Yeah, we went to 30 million, 40 million revenues with previous companies.
That's pretty cool. Jan.
So my name is Jan Losek. I'm the managing partner of Future Energy Ventures. We are investing since 2016 in Series A and B stage companies when the company has 1 million euros of revenues, and then we try to help them to get to 200, 300, 100 million euros in revenues over time, which is then the ultimate goal to then exit companies for large check for the founders and for us.
Excellent. So maybe we first as a panel try to agree on, and I did asked the question, but I didn't get the answers back from the panelists. So what is a scale-up versus what is still a startup, right? So my suggestion was maybe it is when you get into, say, 5 million-ish revenue with real customers, or do you think that's not the right definition? Comments?
I think 5 million works.
Yeah.
Maybe
is
4 million works too.
Is it revenues, or is it?
I would say ARR.
ARR.
So if it's like materials which are being sold.
The bar's going up, right?
Yes.
The bar's going up, yeah. If it's materials being sold, I would want to see maybe 3-4 million of gross margin.
Yeah. Okay. You guys think that's too far, or?
Yes. In my view, yes. But you can have different views on it, yeah.
So probably, I think what we're going to talk about is like how the culture in the company and things in the company change. And I would actually think that sure, it changes a lot when you get to 5-10 million of revenues. But I think when you get your first 4 or 5 customers and you're in the millions of revenue, I think that's when you probably Well, we're going to talk about that when it changes. So maybe we settle for that, right? I think you outvoted here, PJ. So that's,
Too bad for me.
That's well. Maybe then we start by going like, if you then go from a startup company, which starts with making a technology and trying to get it into the market, to being in the market and being that scale up, as we just said, what is the biggest hurdle in your minds to? Maybe Jan, you start from the other side. What do you think is the biggest hurdle, and then also how to overcome? And examples are 10 times better than concepts.
Yeah, then I start with the concept. No, then we're getting earlier to beer and drinks and this kind of stuff. So you did not ask the question, but I still believe it's always people. It's always about people. The right founding team, the right team to scale something. Because usually invest into a technology, you have some customers in a startup, but not many, and you wanted to grow it, and there will be a lot of trouble over the next phase to get to a scale up. So you're looking into people which are excited, which brings diversity, knowledge, connection in order to make it happen. And that's the first thing to generate a scale up, to have the right team in a company which has already proven there's something in it. It's a great technology and a thing. And my argument is always it's about the people. You can't change that. So that's the main ingredients do you need. Then you do a small machine, and then you do the mega machine. No, and then you're talking about scale ups and then growth.
And if you stick to that topic first, and maybe get the view of the others. So, is that the same team during the startup phase and during the scale up, or is it a very different team and you need to build out or replace?
I think it's great actually if you have a core team that stays the same and that really carries the vision of the company forward. But there will be some people who were great in the very, very early stages, but who are not maybe right for the next stage of scaling. So in our case, we have a good mix where we have several members of the team who have been with the company from day one, basically, but also some that you bring in later because now you actually have the capital to hire somebody of that level of expertise, which 4 years earlier you wouldn't have been able to capture that kind of talent.
Carsten?
Yeah, similar experience. I mean, in the first 4 years, I basically managed the company. And we had people doing engineering, because that's what you do. You build product, right? So everything is about engineering. And then in the last 12 months, we actually built a management team on top of that. So brought in a CTO, a proper CTO, an experienced chief operating officer, chief sales officer, and a CFO. And that is preparing the management team to scale for the next level that we are now entering into. Well, we didn't replace people that did the first phase. We just added to the team. I think that's important, because replacing people, I think, is also associated with a big risk for the company, because these people were there for a reason. And they may not be the right people to take the company to the next level, but replacing is, I'm always worried about, actually, because you always lose a lot. I'd rather add to the team.
Yeah. PJ, is there other, and I'll get to you, Jan, PJ, is there other things outside of the people that are different between the start and the scale up?
So people and culture is definitely one element. But the other element where I have some doubts sometimes in 2025 is when we double click on capital. What we see is people raising a lot of money, asking very steep valuations. And then there is a third element, which is the boomerang flies potentially back into your face, which is often forgotten. So very complex term sheets, which stand in the way of scaling the company, actually. Something we see nowadays.
Okay. And Jan, you had something to add before?
Yeah, just to my understanding, the phase should scale up and then getting it to a bigger company. I think where you definitely need to change is if you are having a machine and you wanted to oil it and make it more efficient, and the type of founder which creates the vision and creates the first miles even to the scale stage, it's then usually not the right manager. And there's an age of a company, a stage in a company. Just naming 2 companies, but maybe not the reason. I don't want to talk about the founders of our portfolio company, no. But generally, for example, a company like Termondo or Virta, where we have 100 million or 200 million euros of revenues, for example, there you need then much more managerial capabilities to lead and run a proper business if we wanted to get then to the billion and the 2 billion euros of revenues. And that's usually a time where you add here and there and there and there a managerial capability in order to make it a really flying wheel or machine. So I would argue there is a certain point in time where you need really to think of how to develop the leadership team further, what to add, and what will be the journey, and you should be prepared for your plan B, C, and D, because it's not possible to do everything in that journey. That's also the market showing a lot.
I will add one thing on that's one of the people thing, because we talk about the teams in the company. I would also talk about the board, as I often, I am the chair of many companies, and if I just look at myself, I think I can help really in the early phase of the company until market entry. I've also been part of actually one company, in particular Ultimaker, where I'm still chair today, coming up to 100 million revenue. I actually don't think I'm a very effective chair for that company, and in fact, we're recruiting another chair for that reason, right? And I probably overstate my hospitality. So I think people should also think about the board, and especially when investors are on the board of a company, they should also think, are they still adding value, right? So maybe on the people. If I can ask a question, if I use, I don't know, the 4 probably key success factors of a company, right? Team, capital, product, and customers. And if you think about the companies that were startups and did not make it to become a scale-up, which one of those 4, team, capital, product, customers, do you think is the one that most often prevents a company to get to the next stage?
I'll start maybe with the product part. I think one of the key risks here is hyper-focusing on your early customers and delivering every feature wish that comes from them. So basically not having a clear product roadmap and vision, but building to the very detailed feedback of early customers, and you end up with some kind of a Frankenstein product that in the end is not applicable to a wider market. So this, I think, is one of the key things to avoid, and that's one thing that specifically we told the team 2 years ago, guys, the biggest risk is that we focus on the customers that we already have, focusing on our strengths, which is optimization of complex power plants, and then make the product better and better and better for that niche rather than going wide. So I think that's the biggest product risk, and it's very closely connected to the biggest customer risk, which is, I think, hyper-reliance on single large customer. Thankfully, obviously, this is not our case, but I've heard of a lot of scale-ups who basically ended up being a in-house outsourced development branch for one very large corporate, and for that reason never managed to scale beyond that initial success.
And they were cuddled to death by their corporate partner, as I was
Exactly.
saying earlier.
Yes.
Yeah. Maybe we switch gears a little bit to if you are then a scale-up, and so now you are in that phase where you have your first customers, your first millions of whether it's 2, 3, 5, 10. So what then is the thing that is the critical success factor to then go to 100? Because I've seen many companies go to, 10 and then get stuck there a little bit, right? Even though the market is big. What do you guys think is the big?
We went up to 15-ish, 17-ish prior to being acquired, million euros of revenues. And I think what we struggled with is, or what we didn't anticipate as founders is this, initially you have to have people who are creative because you're looking for this product market fit, and so you also have to be resilient because you get 99 no's and 1 yes, so you have to go back, change the product, go again to the market, etc., etc. Whereas if you're a scale-up and you want to scale at towards 20, 30 million, you have to standardize. So that's a very different skill set. Suddenly, you do not need very creative people. You need people who can repeat in the same way the recipe.
Cookie cutter.
Yes. And that swap requires different people in the company.
Is that why many companies get bought when you get to like that 15, 20 million to then scale? Because in a big corporate where your company's ended, they know how to do cookie cutter, right?
Sure, they have the machine available that can do the cookie cutting, and you just put a product in and make it multiply. That's why a lot of companies exit early on. But I think one step further, I know it takes it a bit back from the conversation. One thing which I think many companies here are doing actual real products. I'm not talking software, but hardware products. And something that I had to learn the hard way, because I'm a software guy, is, hardware is hard, and scaling hardware is even harder. And I think the industrialization phase, that take from a product that actually works really well, perfect, the customers like it, so you think the product market fit is there, but then actually to bring it to a level where it can produce millions of the thing that worked well is a big thing. It's almost like you're rebuilding the product. You have to redesign the entire product for scale. And I think that is, at least we completely underestimated that. It took us 2 years to go through that phase. We thought we could do it in 1 year or less. It took 2 years. And we're just about done. And you might die along the way because you run out of cash. And that's a very dangerous phase. And then, I think we're now beyond that phase. We are fully industrialized. So we can now apply the cookie cutter thing. But if you think you can apply the cookie cutter before you have actually industrialized your product, you make a huge mistake.
Yeah. And do you, if you think about scaling a company and you think about geography, do you think that scaling a company in Europe versus scaling a company in the US and maybe scaling a company in China is different? And if so, okay, yes.
Yeah.
Where? How, Jan?
Yeah. Just wanted to add one thing to the previous question, and then I'm starting to directly to your question, and then you go ahead to have drinks. No, I think unit economics is an important topic in this equation which we discussed right now. No, 15 million means investors wanted to see that there's a horizon of profitability, and you need to be really sure that you get to show unit economics, so unit economics profitability or whatever of the company, and that's quite important in this 10 or 15 millionish side. And then the question is, and I'm coming back to my ingoing statement, team, I think US is, by the way, the best market, but it's not because it's the better market, it's because there's a different mindset, and the mindset is ambition level. So if you in the US create a paper and you come out with the ambition, I changed the world, and it makes somehow sense. You can raise a lot of capital because investors are willing and understanding the asset class venture capital, and they're early movers, and they're also willing to write checks. If you look in US, in the early stage market, there are checks of 50 million euros into a company with a great idea. You don't have that here. And the main reason of that, it's not regulation of markets, and in Europe everything is fragmented. It's just, to my understanding, it's ambition level. We as founders,
or we as investor,
the entire system. I think it's a cultural thing of Europe, maybe. And I don't want it to make. I told you I usually go then beyond your question, so I'm pausing here. But I think ambition level is really a topic. We as potentially founders, so I founded a fund, that's why I'm considering myself a founder. We don't have the ambition level, I create a company of 100 billions of euros for managing capital. And the founders usually, they do the same. They wanted to solve a problem, but don't go behind, and the entire market is working like in this area. That's just my argument.
So maybe to hand over to the rest. So do you think ambition level is the big difference between these, or is it different?
I think it's also a little bit of state of mind, and I would like to reverse the question into, do we have a card to play, us Europeans in our tech? Do we have a card to play in the US, in Japan, in China? And my experience is yes. From the point of view of Restore, we branched out from Europe to Japan because there were Japanese prospects that knocked on our door, and it took us 2 years before we signed a contract there. Which is typically Japanese. They want to build trust. But also some of our portfolio companies, well hidden in the south of Belgium, in love with their technology, and they wanted to branch out to the United States, and we helped them for 2 years to do that. And now we have, in terms of order intake, 50-50 North America, Europe, and that's a journey too. So there are opportunities, and optimism is a moral duty. So I would say, let's go, us Europeans, into the US, into Japan, into China.
So if you agree, or something to add?
I agree in general. Again, obviously US, you have the access to capital, you have bigger funding rounds. One thing I think where Europe has an advantage is in the access to talent, in terms of especially technical domains, etc. And what I find interesting, because you asked about culture, on paper, the European landscape should actually be more enticing to entrepreneurship because there is a bigger social net. The average 30-year-old is not saddled with student debt, right? So objectively speaking, the average 30-year-old European has a much larger, let's say, incentivation or the bigger possibility to become entrepreneurial, yet on average it doesn't happen. So I do think there has to be something culturally ingrained. Maybe it's ambition, maybe it's risk appetite, maybe it's how we deal with success and failure or how we define success and failure. So I think those are cultural factors. One advantage, I think, exactly. Carry on.
Carsten, anything to add?
I think we're, maybe I misunderstand the question, but we're talking typically about European companies trying to build a scale-up, not about where I'm going to start my next startup, right? So if I'm a European company and I want to scale now, I think the question, I understood the way, which market do we want to scale in?
Yes.
And from that perspective, normally I would say the United States, because it's a huge market and it's homogeneous, right? It's the easiest from that perspective. But at the same time, you're also facing lots of competition, harder competition than maybe in other markets. And something I found surprising in our case is that Asia actually is a very exciting market to scale, huge in its potential and completely researched and underestimated from our perspective as a target market, I think. We always look at the US and Europe, but Asia, we do a lot of business in Thailand, in Indonesia, right? It's huge for us, much bigger.
Can we make that
shorter decision cycles than you would have in Europe and the United States. Less regulatory hurdles and a great market to scale.
So why don't we make that the last question? One sentence only to each of you. If you were to scale your company or one of your portfolio companies, what other country outside of Europe, or would you just stay in Europe? Would you go to China, the big, and maybe that's a conversation to then continue over a glass of beer, or is America still, our best friends, or, do we go somewhere else? PJ?
In digitization of grids, I would say go Japan.
Okay. And that's because maybe 2 sentences. So
because
he gives a short answer, and I say no, that's too short.
You asked for a short answer.
No,
Japan is actually unbundling its electricity market, and Japan looks at Europe and looks at European technology.
Okay.
I would also go. First of all, Latin America, and then Southeast Asia and Japan, for the same reasons, similar market design coming, and a greater openness to being supplied by European companies.
Okay, Carsten, you said it right.
I just do copy and paste. So it's Southeast Asia, but Latin America, fully agree. Chile, Brazil, and Indonesia, Thailand, the further developed countries that are huge in potential.
Jan?
Yeah, it depends. I'm not a lawyer, but it depends what your solution you're offering right now, no? And with grid, I would go definitely US. It's a different problem to solve, but you need digital tools in order to solve. They lead a lot of new grids. The grids are aged, and there's a lot of stuff to write. If I'm doing now EV, just EV, like companies like in our portfolio, like EV Energy US, for example, it's Verta, Hubject, and so on. So I would say go Asia. Don't waste your time in the US, because that's the more exciting market, because then Carsten is right. There you can scale, the markets are ready, there's a lot of capital, great partners, and a lot of population for solving the problem. So it depends. EV, Asia, grid, US, America.
So as I'll take the prerogative of being the moderator as to make the last remark. Then I think what we also, as clean tech entrepreneurs and investors in this room, are obliged to think about again, I say, is actually China. I mean, China is putting more capital, more R&D, more everything into this market than any other country. Now, obviously, we were super hung-go on China a decade ago. Where should China's strategy was kind of like first question when you walked into a boardroom. We then said, no, sorry, China's the enemy. It's all the US. I think now we need to reconsider. And that is then a conversation to invite all of you to over a glass of wine or beer. Like, are we going to go China again? Are we going to go US, as we've been doing for the past 10 years, realistically, I think with a lot of the European startups, or are we just going to stay in Germany and get the 80 million German people to become successful? Thank you very much for your time, and thanks for hanging in there. And the bar was open.